Good morning, it's Harvey Jackson. Just going to go through the quick results of the U.S. election. As you can see here, Trump has won with even the media that's not always in line with Trump's views, and already won, and looks like he's probably going to get those two states over there. And it's going to be definitely a lot more red on the screen than there was previous elections. So he's already gained majority of the Senate, and it looks like he's going to gain the majority over the House as well. So if we're thinking that there's going to be any resistance for the first couple of years before you get new House and Senate people coming in, there probably won't be any. His first term in office, he had resistance within his own party. He doesn't even have that this time. So um, I don't know if tweets at 2 o'clock in the morning or posts are going to have the effect that it had last time, but definitely want to have orders in place for some of the volatility that might get kicked around if he starts doing that when he gets sitting in the seat. I don't think executive orders are required, at least not for the first couple of years, because he can just get things put through the House and Senate. But it'd be faster to put it through an executive order than it would be to try to get it through the House and Senate, because there's always games that get played. Just look at the Canadian politics, and games are still getting played from almost a month now. As you can see, the Canadian dollar and is down. Wheat and soybeans fall, but this was printed a little bit earlier. We'll see if that's still a fact. The the USDA is coming out with their stocks report on November 8th, and here are the ranges of trade for the ending stocks. It, you know, it, I think anything different than these numbers will probably get traded, and the market is kind of trading these ones separate. But you can see that the average trade guess on yields, there's still great and big supplies in the U.S. So let's just have a quick look from yesterday's down day. Canola is down a little wee bit. Rapeseed is trading up. Soybean oil is trading up, and palm oil is up 102 ringgits. Chinese oil is down a little wee bit. Crude oil is down almost $1, and soybeans down 19 and a quarter cents, and wheats are down. I'm going to say 5 to 8 cents per a bushel, and the Canadian dollar down at 33 points. So let's just have a look at canola. You can see yesterday's down day and where we're trading right now. I put the 200-day moving average on here as probably a fairly important point, and the 50% wave retracement for wave analysis. So you can see that's right there and then right there as well. So we're trading right at it right now. Look at this as a potential opportunity to buy back in for some length on the wave analysis to take us up. Exports, the reason that this is actually flattening out because there's very little data for November as of right now, but the way things are trending, it looks like we could actually stay above this line of our most recent export pace. Here's the exports by the months, and of course you're looking at no months on top of here, but are we front loading ahead of uh, the U.S. President actually sitting in office? And definitely looks like we could be, but it still looks like we have really big months of exports, and October and March are both of them. European rapeseed, we broke below the channel, but a good day to recover here. So probably have to redraw this and just have a look at what that's doing. But what it is actually doing when we look at the daily and the difference between the Canadian rapeseed and canola, we're trading $138 differential. If that doesn't spur any demand, nothing will. So if we look at it back longer term, we go back to there where there was and there's a difference between charts. The previous chart was daily. This is daily nearby to be able to get more time in here. But I would say that this has not really happened, but we are trading above that range way back here in the 20s. Soybean oil had traded above this longer term trend and trading right at it right now, and with a 200-day moving average as support here as well. So what does that look like farther when you zoom out and look farther back? If we can maintain and get above this and hopefully get a better trend, and where we're going to get that support is from the other veg oils. And when we look at this steep move up on palm oil, it's been fantastic, and we are very near my 5,000 ringgit line. And you can see where that ringgit line last time it actually really traded in this range is back here. and that's when veg oils actually had a lot more support too. West Texas traded down with the news, and again, all these moving averages are the shorter term are right at it and below it, but you can see that there's this upward move really still supported to a certain degree or a good degree as well. Here's the Canadian dollar. Here's that move down. It's a fairly long candle. We'll see how this settles. I think the Canadian economic fundamentals will probably kick in here as well. Still sounds like there's going to be another rate decrease on interest rates. We'll have to look see how that's going to affect it. And once the market kind of digests the Trump presidency as well, the market will probably feel a lot better about that in time. So here's the reason to maybe go long here is just because of this here. We do go below it, but it hasn't been. You sure don't stick down there for very long. Wheat looks like we're trying to break out of the top of that channel, where it would be interesting to put in to see if the market can get above all of these moving averages where they're converging right at that 620 mark on the spring wheat. If we can get up there, that would mean a lot because the 620 and the 23.6 retracement value is very important for the market to get to. So just as a farther zoom out view, what does that look like? And doesn't we have to go quite a ways above to be able to break this longer term trend that we're seeing there. Here's your Chicago wheat trading at the top end of the channel, but not broke through, and the moving averages are still above there as well. What does it look like where this is traded in the most recent past? Hard red winter trading at the top of the channel. The market needs to get above all of those trading averages above there, and again lines up with that 23.6 retracement value. Milling wheat moving averages above, but continue to be soft. Here's corn, and we've got this wedge. Basically, we're trading in this wedge, but we're trading above those short-term moving averages, and that's supportive still yet. So if we can get corn to break out, we can take the wheat along with it as well. Here's your longer view. And don't forget, we got a couple of days before this USDA report, and still all the oxygen in the room is probably still taken up by the U.S. election. It will for the next few days as well. And that's all I got for you. Take care.